Assalamu alaikum, everyone. We are happy to welcome you again for yet another webinar today. We will wait for a few more minutes. So, on behalf of Emirates Institute for Banking and Financial Studies and Chartered Banker Institute, Ramadan Kareem to all. And thanks for taking time and joining us today. So, it will be great to have a quick check-in, utilize the chat window, and please let us know where are you joining from, as well as in case you can, please let me know your organization or your domain of work, whether it is corporate banking, insurance, retail banking. Please feel free to bring in that in the chat. So, without further ado, I'm happy to welcome all of you for this webinar today on the topic Frontiers of Green and Sustainable Finance. And I'd like to welcome Dr. Neil. Dr. Neil is our Director of Learning, who will be having his opening remark and introducing the speakers and the guests today with all of us. And thanks again on behalf of the Institute for taking time and joining today. Thank you. Thank you, Kamran. Thank you, Ahmed. Thank you, Muhammad Johar. Thanks for joining today. Ramadan Kareem. Over to you, Dr. Neil.
Thank you very much, Phoebe. I think we're excited about the presentation today. We've got some brilliant speakers from CBI. The topic itself, I think is fairly controversial and fairly emotional. I think it depends on what side of the spectrum you sit and what you want to do with it. But let me start off by thanking all the guests for joining us this morning. We're really looking forward to a very interesting and interesting debate and presentation by Simon. Just a bit of housework before we start. If we can request that if there's any questions you want to ask Simon during the presentation, if you can put them up in the chat, then Simon will have a look while he's presenting and talking if there's any questions. And obviously, once Simon's is finished, we will then we will look at the questions and add them. It will be great also. Phoebe requested if you could put something about yourself and where you're from and what's your interest in the topic of frontiers and green sustainability finance. I think it also adds the presenters when they present and they can see somebody's coming out of the world of corporate banking or whatever to actually add value or to use examples in their talk. But let me go a bit further to say the following. I think the concept of sustainable finance and climate risk is one of these things that creates a lot of emotion. And I think the emotion creates because I think there's a lot of uncertainty around the world and uncertainty in people's minds of exactly what it means and what does it entail. I think, we all hear words like a carbon footprint, and then we think about somebody that walks around and putting carbon footprints all around the place, but it's actually something different that it means. And we hear the things about zero emissions or zero investment targets, COP26, COP28, the Paris Accord, climate focus engagements. We all these terms, and I think these terms becomes overwhelming to all of us. And that's why we decided today two things: first of all, to invite Simon to talk to us on climate change and the sustainable finance, and then to ask Val Buchan to speak about the qualifications that we do offer with CBI. So let me just quickly start off by introducing Simon to you guys. Simon Thompson was appointed as Chief Executive of Chartered Bank Institute in 2007 after working for the Associate of Chartered Certified Accountants in Central and Eastern Europe and for the International Federation of Accountants. Under his leadership, the Institute, the Chartered Banking Institute, has grown to become the largest professional body for bankers in the UK, with nearly 350 members and students over more than 100 countries. Now, Simon is also author of the book Green and Sustainability Finance Principles in Practice. We will put the link to the book and where you can find it in the chat as well. So those of you that are keen and interested, Phoebe's posted it, keen and interested in buying Simon's book, by all means, go ahead and get the book and look and read it. Simon leads the Institute's work in this area of sustainability. He chairs the UK's Green Finance Education Charter on behalf of the Department for Business, Energy and Industry, and is the former Vice President of the European Bank Training Network. So that's a bit about Simon. Now, Val is the one that will cover the educational side or the certification side later on. Now, Val is the global business partner for CBI, and we've been very much involved with Val in our certifications of our qualifications as well. So to both Simon and Val, welcome to the webinar, and I hope really it is profitable and good for everybody. So Simon, I've done the introduction to you. Obviously, you've got a lot of anticipation, and I think the people joining the webinars also got anticipation of exactly what finance and green sustainability finance means. So without further ado, let's go over to you, and you can sort of try to enlighten us and make us less scared of this sort of thing that we all think and hear about, and trying to do something, try to understand the concept of sustainability.
Well, thank you, Neil, and yeah, good morning, Ramadan Kareem, everybody. Greetings from very chilly Scotland, but a warm welcome to our friends and colleagues at the Emirates Institute of Banking and Financial Studies, and all of you. And thanks for the kind introduction, Neil, and thank you, Phoebe, Francis, and Zane behind the scenes for organising today's workshop. Yeah, my job definitely is not to try and scare anybody today. It's my job is to try and excite everyone, and hopefully through the Emirates Institute and through your institutions and through your what you might want to do sort of personally after this webinar. I want to kind of talk to you about some of the exciting opportunities that are there from the transition to a more sustainable, low carbon world. I'm delighted that my colleagues now at the Chartered Banker Institute are working with the Emirates Institute. This isn't just about saving the world, it's also about a fantastic commercial opportunity for the banking and financial sector. But there is no more important, or in my view, interesting and exciting subject in finance at present. And I think alongside digital finance, sustainable finance is one of the global megatrends that's going to shape all of our careers in the direction of finance for, at least a couple of decades. And of course, particularly relevant to yourselves in the UAE, as you'll be hosting COP28, one of the big global climate summits in about 18 months, I think, from now. As you may have read this week as well, the final part of the IPCC's latest review of climate science, according to that, greenhouse gas emissions have to peak by 2025. Now, that's not very far away now at all, if we're to have a chance of limiting global warming to 1.5 degrees above pre-industrial levels. That's going to be very, very difficult. Val, would you mind going on to the next slide, please? This is when we talk about climate change, climate finance, green finance, sustainable finance, responsible banking, this is an incredibly wide and very rapidly developing subject area. And so I can't possibly hope to cover all the aspects of this in a single workshop. So what I'll try to do this morning in about 20 minutes is to introduce the subject in general, and offer some insights in sort of these three particular areas. So what financial institutions individually and collectively are doing through bodies such as the Glasgow Financial Alliance for Net Zero to address climate change and sustainability. I'll try and give you a perspective on some of the challenges and opportunities that I see this year and coming up over the next couple of years. And in particular, given our role as an educational body, I want to focus on our role and work in this area to ensure that in the former governor of the Bank of England's, Mark Carney's words, he's now the UN Special Envoy for Climate Finance, that every professional financial decision needs to take account of climate change. And hopefully I'll also whet your appetite for the subject, which you can then learn about more through the certificates in climate risk and green and sustainable finance, which we're offering now together with our colleagues at the Emirates Institute of Banking and Financial Studies. Great. Val, could we go on to the next slide, please? Now, tackling the climate crisis is our greatest collective global challenge, and the role of banking and finance and the role of banks and bankers within that in leading and supporting the transition to a more sustainable, a more climate resilient world is key. There's both a strong ethical case for sustainable finance based on stewardship of the environment and natural resources, But there's also a very strong commercial case too, based on the accurate pricing of climate risks, the externalities of carbon, and the identification of the very substantial financial opportunities for investment in low carbon firms, sectors and technologies. And also, and this is a point I'll underline as I go on, it's not just investing in low carbon firms, sectors and technologies, it's helping high carbon firms transition to low carbon business models. But financing this transition requires the rapid decarbonisation and redeployment of global capital, a whole realignment of the finance sector. So to come back to Mark Carney's words, every professional financial decision takes climate change into account. And that's a really important phrase, and please bear it in mind, because I think it's not just a phrase I'm going to return to over the next 20 minutes or so. I think it's a phrase that will shape our careers for the next 20 years, as well as our financial institutions and financial sector. So let me explain a little bit more. If we could have the next slide, please, Val. Val, can we have the next slide, please? Thank you. So I hope you've all heard of the Paris Agreement. The Paris Agreement on climate change has 3 objectives. The first is generally the one that people know. It's to limit global warming to below 2 degrees, and ideally to keep it close to 1.5 degrees, called climate change mitigation, so decarbonising the global economy. But as we've seen from the IPCC report this week, it's going to be very, very hard to keep global warming below 1.5 degrees, almost impossible really, I think now, and we're going to have to work very hard to keep it below 2 degrees. The second Paris Agreement objective is also reasonably widely known, and that's to promote climate resilient development, so climate change adaptation, to make our world more able to cope with increased global temperatures. But the third of 3 Paris Agreement objectives is less well known, but it's critical to achieving the first 2 objectives. Article 2.1c requires countries to make flows of finance consistent with low greenhouse gas emissions and climate resilient development. And I think it's very, very telling that the key global climate change agreement singles out the critical role that finance plays. That's our role. And as countries increasingly adopt net zero emissions targets, finance, that's banking, investment, insurance, accounting, audit, all aspects of finance, will be expected and required to play a leading role in the transition of energy, transport, agriculture, buildings, in fact, decarbonising every economic activity, every economic entity to sustainable low or zero carbon models. That's what the transition really means. And I think the system-wide impacts, the costs, the risks, and the opportunities of that transition are not as widely understood as they should be within finance, let alone within business and society more generally. They are very much exercising central banks and regulators because of the implications for prudential regulation and financial stability overall, which is why climate risk, disclosures, stress testing, and so on are at the top of regulatory and supervisory agendas. But the transition to net zero is also an opportunity, and a very, very big one. Remember, we're talking here about the transition of all organizations, large and small, to low carbon business models. And that's going to require a lot of things. One thing it definitely requires is finance. So the latest estimates are perhaps $6 trillion to $7 trillion per year for the next 20 years, with some 70 to 80% of this coming from the private finance sector. So this isn't something that governments can pay for, even the wealthiest governments. To put this into context, the sums involved are roughly equivalent to post-World War II reconstruction plus the Apollo space program combined. So that's a lot of lending and investment, which is, of course, one reason why the finance sector is so interested in this area of green and sustainable finance. There's a very significant commercial opportunity. Of course, idealists might claim that financial institutions are motivated by a genuine sense of altruistic social purpose, or at least by enlightened self-interest. And that's absolutely true. Some, in fact, many absolutely are. That's the idealist perspective. Some realists might point to the fact that there's a lot of regulation around the disclosure of climate-related financial risks. There's climate risk stress testing coming in many jurisdictions now. And so there's a regulatory force to make this a strategic and operational priority for institutions. And that's definitely true as well. And some cynics will simply point to the commercial opportunities available and say, look, if we can invest in the next Tesla, if we can invest in the next net zero transitions of sectors and firms over the next 20 to 30 years, we'll make above market returns. And all those things all those three viewpoints are equally valid. But I'm not sure the motivations particularly matter, because if we successfully combine the environmental and the moral imperatives with the commercial opportunities, then I think what happens is we create a very dynamic and hopefully unstoppable force to mobilize the power of private finance to tackle the climate crisis and to embed sustainability firmly within finance so that all finance becomes sustainable finance. And that's what we need to do urgently, rapidly, and with collective ambition if we are going to keep global warming below 2 degrees. Val, could you go on to the next slide, please? And that idea of collective ambition is the aim of something called GFANZ, the Glasgow Financial Alliance for Net Zero, launched by UN Special Envoy, former Bank of England Governor Mark Carney, almost a year ago now, and given a lot more profile at COP26 in Glasgow in November. Now, the alliance brings together the various UN-convened net zero alliances. It's aligned with something called the overarching Race to Zero campaign, and it brings together some 450 financial firms from 45 countries responsible for total assets in excess of $130 trillion. Now, if all of those assets, if the 130 trillion were all deployed to tackle climate change, that would solve the problem, or at least it would fund others to solve the problem. If you think of the $6 to $7 trillion a year we need for 20 years, I mentioned. The issue, of course, is that's total balance sheet, and only a minority of that 130 trillion is being deployed in green and sustainable finance at the moment. And the reality is that despite many commitments made by banks individually and collectively, not just banks, insurers, investment firms, and so on, the finance sector still funds far more high carbon than low carbon. So to give a couple of examples, whilst green lending and investment has increased quite substantially after the Paris Agreement was signed in 2015, this was from a very low base. And in fact, bank financing for fossil fuels has also continued to increase until the last year, at least, since the Paris Agreement, and from a much higher base. So while we may be funding more sustainable lending and investment, we're also funding more high carbon lending and investment too. Green bonds are a very interesting and exciting sector and have grown to more than $1.5 trillion in total issuance now. And there's increasing numbers of sovereign, municipal and corporate green bonds. Also some emerging evidence of a greenium, where the yield on a green bond is slightly higher than its vanilla equivalent. But green bonds still represent only a very small proportion of total issuance, which is something like 120 trillion. So 1.5 trillion opposed to 120 trillion. So you could look at this from two perspectives, couldn't you? It's still a small niche, but equally there's a lot of room for growth too. And in fact, even looking at green lending and debt overall, on the broadest definitions, it probably accounts for less than 4% of total lending. So again, although growing fast, kind of green lending is still only a small part of finance overall. And the key figure for me is that it's estimated that at present global markets hold portfolios probably consistent with somewhere between 3 to 3.75 degrees of global warming above pre-industrial levels, maybe even as much as 4 degrees Celsius of warming. And this is quite literally unsustainable. If you look at the climate science, a 4-degree warmer world is not one that any of us would want to live in at all. Which is why you have collective alliances like GFANZ and so on that are trying to align the private sector with sustainability, so that, to go back to Mark Carney's words again, every professional decision takes account of climate change. And I'd argue not just climate change, but broader environmental and social sustainability factors too. Now, the GFANZ members and many other institutions that are not members of GFANZ all commit to using something called science-based guidelines, science-based targets to reach net zero emissions by 2050 at the latest. And this has to cover all emission scopes. So this involves then the very complex business, not just of measuring the direct emissions that a bank or an insurer sort of releases through its own buildings, but the financed emissions in lending and investment portfolios, and all the complex supply chains interlinked with those investment and lending portfolios too, which we're only just starting to get to grips with in our sector. And GFANZ members also have to set interim 2030 decarbonisation targets, which for most institutions are to sort of reduce their emissions by about 50% in just sort of 8 years or so ago. That's only 8 years away. So, this would need very rapid decarbonisation of portfolios, and it's going to be extremely, extremely challenging. Val, could I have the next slide, please? Time doesn't permit me today to go into all those challenges in great detail. We cover a lot of them in the learning that accompanies the certificates and so on. But my own belief is that whilst the ambition of many financial firms and alliances is admirable, I think it is perhaps in some cases too ambitious, particularly when I hear a specialist lender like a bank like Triodos, who have more experience in this area than most, as well as a much greener portfolio. They say publicly it will take them longer, perhaps till 2035, to decarbonise portfolios by half. So I wonder if some of the big, less specialised institutions really understand their portfolios to the extent that they need. But that's one of the challenges. Other challenges, just very briefly, we need more consistent global approaches to policy and regulation. We're not going to get a single set of definitions, a single taxonomy. We're not going to get a single set of global standards, but there's a lot more harmonization around policy, regulation, definition, and standards. There's a new International Sustainability Standards Board that is being set up at the moment. It's just released its first standards for consultation. But remember that even in financial reporting, very well established, major financial markets such as the USA and China tend to follow their own standards. I suspect the same will happen here. We need more realistic and consistent global carbon pricing, so the real costs and externalities of carbon are factored in and affect the relative costs of capital for high versus low carbon sectors and firms and technologies and so on. The EU carbon price touched almost €100 in early February before falling back to about sort of below 80 last week. But we are starting to get close, at least in Europe, to a realistic carbon price, not matched, however, by carbon prices in the rest of the world. There's the technical challenges of measuring emissions and other sustainability factors through very complex and lending in investment portfolios, I mentioned earlier, and that needs credible, consistent, comparable data for reporting, for disclosure, to support capital allocation decisions. A lot of work going on from a lot of bodies on that at the moment. There are the challenges this year, particularly, and we'll see this. We'll see this, I think, becoming ever more important of addressing broader environmental risks around biodiversity loss and how these are interlinked with climate change. But there's also a lot of opportunities from investing in biodiversity, investing in what's called natural capital as well. Something called the Task Force for Nature-Based Financial Disclosures has just published the first better version of its framework. And by the time COP28 comes around in Dubai in 18 months, the final version should be just about available. But it's especially the lack of capacity and capability, even within the largest, the best resourced financial institutions, that I'm particularly worried about, and I spend a lot of my time working on. Because remember, this isn't just about banks and insurers and investment firms themselves building their own capacity and capability. It's also about helping the firms we lend to and invest in build their capacity and capabilities to support their transitions to net zero as well. And it's in this area where I spend a lot of my time, and my colleagues and I at the Chartered Banker Institute and other professions in the UK are spending a lot of time and our focus, and which is why I'm particularly glad to be here speaking with you today and working with the Emirates Institute. Val, could I have the next slide, please? So remember I mentioned, and I've kept coming back to Mark Carney's phrase, that every professional financial decision needs to take climate change into account. Now, to pass what I would call the Karni Test, if every professional decision is to include climate change, then every finance professional, every actuary, every accountant, banker, investor, insurer, risk professionals, all the supporting professionals need to develop their knowledge an understanding of climate change and sustainability to the extent relevant to their role and to the organization they work in, and then use this to advise, finance, and support customers and communities as they transition to more sustainable, low carbon business models. But for me, and this is another important point to underline, and again, to try and make this whole area seem a little bit less scary to pick up on Neil's introduction. Aligning banking and finance with the objectives of the Paris Agreement and with broader sustainability goals doesn't mean we all have to become deep climate change and sustainability experts. We don't have to go off and all take PhDs in climate science. Now, yes, it's definitely the case at the moment that financial institutions are building up their kind of central climate risk and reporting teams, and such professionals are in high demand at the moment. But we're not trying to build a profession where we're all climate scientists or all experts in climate modeling. What we need, and what we're working to achieve at the Chartered Banker Institute, is a banking profession where banks and bankers focus on what we can do best, which is transforming unproductive savings into productive lending investment. But in this case, in the new firms, the sectors, the technologies that we need for a more climate resilient, sustainable, low carbon world, and to support the transition of existing sectors and firms from high to low carbon models. And this needs the professional skills and knowledge of banking and finance just as much, if not more, than it needs the knowledge of climate and sustainability. But it needs those professional skills, your professional skills, to be deployed in the assessment of risk, in considering lending and investment propositions, in the design of products and services, in the advice given to clients and customers through a sustainability lens, informed by a knowledge of green and sustainable finance and climate risk, supported by expert sustainability and other professionals, certainly, but working together to find financial solutions that are both environmentally and financially sustainable. That's really what sustainable finance is about. Val, could I have the next slide, please? And so think about some of the emerging areas that we're seeing now, where sustainability-linked bonds and loans, for example. That's so not just here thinking about a green bond or a green loan, debt that seeks to incentivize improved sustainability performance through margin enhancements, through lower covenants, or some other incentives if agreed sustainability targets are met during the tenure of the loan. So a good product here for supporting the transition to a more sustainable business model for a firm that wants to transition rather than just lending to a green sector and firm.
So Simon, there is a small noise disturbance coming, so they thought of just checking.
Oh, I'm sorry, but I can't hear anything at my end. It's completely quiet here in Scotland. It's only 8:30 in the morning, so the country is waking up. So maybe could everyone check to see if they're on mute? That often seems to be a problem when it happens here. Let's wait a moment while everybody goes on mute.
That sounds good now, Simon. It was like something was rubbing your mic, but it's fine now.
Oh, okay. So the point I was, or where we left off was, or to talk about some of these sort of emerging products in the green and sustainable finance area, and the fact that these are not scary products. These are loans, they're bonds, either on the corporate or the retail side, that are really no different from sort of existing products. So a green bond is simply a bond that, as well as producing a financial return, has or intends to produce a positive environmental impact, and there's additional reporting and verification around that. So it's slightly more complicated, but it needs finance professionals to design it, informed by sustainability professionals. It's not something kind of completely new. Another good example to put on the slide would be a green mortgage, which we're now starting to see take off here in the UK. Again, a green mortgage isn't hugely different to a standard mortgage. The main difference is usually a slightly reduced interest rate, where the discount relates to a property's energy efficiency. The theory there being that the more energy efficient a home, the lower the utility bills, the higher the proportion of income available to service the loan, and hence default risk is reduced, and so therefore the price of the mortgage can be reduced. I mean, here in the UK at the moment, discounts are not huge. So they tend to be something like 10 basis points on a 3-year fixed mortgage at 3%. But this will become more significant, if, although I think these days it's very much will be a when interest rates continue to rise. And just to give you some idea about how quickly these sort of markets are growing, a year ago, there were only a handful of green mortgages in the UK from some specialist lenders. As of last month, there were nearly 40 products available now, including from major banks like Barclays and NatWest. And both sustainability-linked loans and green mortgages are, I think, good examples of banking products and services that both address climate risk and promote more environmentally sustainable behavior by companies and individuals. But again, they're not particularly complex products from a financial perspective. They are simply existing products enhanced with a sustainability wrap around it. But I think the challenge for us, for everybody, whether that's in the UK, in the Emirates, in the US, in Southeast Asia, and so on, is to take these examples of what are still to some extent pioneering products and move these examples of best practice so they become standard practice in all financial institutions, in all markets, everywhere. So that every financial decision, every credit application, every new product design, every piece of advice given to clients and customers does take account of climate change and sustainability factors more broadly. And this then, I think, implies upskilling and reskilling not just small teams of sustainability specialists, but all banking and finance professionals, which is definitely my ambition here at the Chartered Banker Institute in terms of the banking sector. And we offer an ever-growing range of qualifications, learning programs and materials to help banks and bankers, finance professionals like yourselves just do that. Val, could I have the last slide, or last one of my slides, please? Oh, there's a bit seems to be missing on that slide, but never mind. There were some nice pictures there. Just to conclude, almost to conclude where I began, I really think there is no more exciting, interesting, probably no more personally and professionally fulfilling area in banking either. When your families and friends ask you what you do as a finance professional, then if you've aligned your professional practice with the objectives of the Paris Agreement, with sustainability more broadly, you can tell families and friends, colleagues and customers with a real sense of justified pride that you're helping to build a more sustainable world and create sustainable prosperity for current and future generations. And surely that's what banking is here to do, ultimately. It's to create prosperity for our current generation and for those generations that come after us. And that's both, say, an ethical objective, but it's also a sensible commercial objective for individuals and institutions too. But this is why I think this is such an important, interesting area, and why I'm personally delighted to be working with Neil, Phoebe, and our colleagues and friends at the EIBFS in this exciting area, and hopefully with many of you too in the future. But I would love to hear your thoughts and comments now. I've spoken for about 20 minutes. So why don't we take a few questions and then I'll hand over to my colleague, Val, who will introduce the certificate in climate risk and green and sustainable finance to you. So Neil, I think back to you for some questions.
Thank you very much, Simon. It was a really awesome presentation. I think it was really informative. I mean, I always say to people, I've learned a lot. And I always keep learning, and I think it was really, really great. We've got three questions here I want to ask you. We might have more by the time we finish. But I think let's start off with the one I received from Andrew Dix. He asks, how do you balance the investors' requirement for return on investment, the shareholders' return on investment, versus the sort of moral obligation to invest in green finance? How do you balance the traditional returns versus the moral obligation of green finance and green investment?
So I think there's two. Well, first of all, it's an absolutely key question, and I think there's two aspects to this I'd like to address, if I may. So, firstly, or maybe perhaps give a little bit of context. Certainly, in the early days of responsible investment, sustainable finance, there certainly was a trade-off between financial return and environmental sustainability impact. There was a strong element of philanthropy, or at least accepting below market returns in the sector. That's no longer the case. There is an increasing range of compelling evidence that, in fact, sustainable finance creates above market returns. As I mentioned earlier, just in passing, maybe you didn't pick up because of the sound issues. There's increasing evidence of what's been termed a greenium on green bonds. In other words, the yield on a green bond is higher than its vanilla equivalents. In the investment sector, there's been a whole series of academic and sector studies over the past 2 or 3 years, which show above market returns for not just investments sort of labelled as sustainability, because then you get into issues of greenwashing and, to what extent are funds and investments actually green, but to those sectors or to those funds and investments that are genuinely green. There was I can't remember the exact name of it, but I think there was a BlackRock, what I thought was a very compelling BlackRock paper on this in February or March. But I think the broader point, though, is over a medium or longer term sort of time horizon, if we accept that we have to move to a lower carbon world and keep global warming below 2 degrees, and the scientific consensus is overwhelming. If one looks at the IPCC reports that were out sort of this week, those are broadly supported by all countries. You're talking about contributions from thousands of scientists and so on. Then the future world looks very different from the current world, which then brings into focus transition risk and the costs for high carbon firms, high carbon sectors of not transitioning. And if you're over invested in those sectors, you'll be faced either by asset stranding on a considerable scale, but certainly asset impairment as the world moves away from those high carbon assets. So it just doesn't make sense on a medium or longer term perspective, I think, and returns will undoubtedly be lower.
Okay, thank you, Simon. Then we've got a question here from Mohammed Nisamuddin. He's actually got 2 questions, but I'll pose both to you and we can answer them in one, because I see there's suddenly a whole lot of questions coming up and we press for time. So let me just put both to you and then we can carry on. There's the whole concept of air pollution. How do banks, when they fund, what would be their role in controlling the air pollution that's around us? That's the one side of the question. The other side of the question goes around what is meant by net zero, and how is it applied, the concept of net zero in a financial institution?
Yeah, so net zero is one of these terms that's thrown around quite a lot, and a lot of sort of similar terms, and there's slight differences between them. So you'll often hear things, or sometimes there's slight differences between them. So you hear things like net zero, carbon neutral, and so on. In brief, though, kind of net zero means getting to at a global perspective, means getting to a point where our greenhouse gas emissions are reduced to a level or offset, and there's a whole debate about to what extent offsetting should be allowed in this, but in most definitions of net zero, offsetting is allowed, so that basically in terms of carbon dioxide and other greenhouse gases, so you have things like nitrous oxides, you have methane and so on. And again, some definitions include other greenhouse gases, others don't. But for the purposes of a simple definition, just think about carbon dioxide, and making sure that our global emissions of carbon dioxide are kept at a very low level and or offset, so that overall there are net zero emissions. That's what it refers to. And we can talk about that at a global level, net zero. We talk about it at sort of regional or country levels. So we talk about countries' net zero targets. And we can also often talk about it at the level of sort of banks or companies and so on, that a institution themselves has a net zero target. Within that, there's one important bit to unpack, which I did allude to in my talk, which is that you have both direct emissions. So those are the greenhouse gas emissions that a firm themselves emits. So if you're a bank, that will be things like the emissions from your building, from your data centers, from your employees' travel and so on. But if you're a bank, that's a very small part of emissions. Then there's what's called financed emissions, scope 3 emissions in the jargon. Those are the emissions, the greenhouse gas emissions from the lending and investment activities you have. So all the companies you hold in your portfolio. So if you hold a Tesla in your portfolio, relatively low emissions. If you hold lots of oil and gas companies in your portfolios, very high emissions. And so that's where a lot of the effort in banking and finance is going, to reduce those to net zero, because the direct emissions from our buildings and our operations is actually very, very, very small proportion of our overall emissions.
That's great.
Sorry. There was a second part to the question, Neil, and I spoke for too long and completely forgot.
No, it's not a problem. No, the first part was on the funding and how do banks actually fund the zero admit or fund to get zero admission when they do funding. So I think you've answered it. I think we've got a lot of questions, so we'll leave that over. What I will do as well, I'll take all these questions down and I'll email them to you. And I know you're extremely busy, so you might just, when you're busy, relaxing, watching some rugby or football, you might just send some answers to us, but I'll get the questions to you. I've got a question here, especially in this market where we do a lot of Islamic finance. When we talk about Sukuk bonds, how does green finance fit into the world of Sukuk bonds?
I'm not at all an Islamic finance expert, so I feel I suspect I'm in the presence of many, so I'd be interested perhaps in your views on this. But in brief, my understanding is firstly that the kind of Islamic faith tradition places a very high value on environmental stewardship.
Yeah, that's right.
So there's a very good straightforward link there between kind of green finance. And again, so green sukuk is very similar to a green bond. Just as a green bond is a vanilla bond with that also seeks environmental and other sustainability outcomes, and there's reporting and verification of it. Basically, green sukuk works the same way. There's been a lot. I know from our colleagues in Malaysia and Indonesia, there's been a lot of efforts in that part of the world to try and really get the green sukuk market going. Indonesia, I think, has launched a couple of years ago the first green sovereign sukuk, but it's fair to say the market hasn't taken off at all, probably because the focus has been so much on the green bond sector that sort of introducing another but quite similar instrument, at least from the financial perspective, if not from the ethical and religious perspective, just hasn't been the market demand for it.
That's great. So we'll take two more questions because there's a lot of them coming through now. So we'll take record. I will get them across to somebody and we can get them back to you. The first one I want to ask you comes from Shahaz Butt. He wants to know, what is the future of the carbon credit market and clean technology finance using carbon credits?
I wish I knew would be the answer to that. This is again another one of these areas where there's another area where Mark Karni's very much sort of involved as well, and there's yet more kind of global bodies trying to bring kind of consistency to the carbon credit markets, because there are so many different carbon prices worldwide. Although I think I would say generally the world is going in the right direction. Although there's a huge variety. Some carbon prices are well below $1 in the EU, as I mentioned. We're now up consistently to above kind of 70 euros per ton of CO2 emissions or equivalent emissions. China's just launched an emissions trading scheme that's being rolled out to more and more sectors. So although it's going far more slowly than the environmental NGOs would like, we are sort of slowly moving towards global carbon prices. There's also the we need to bring consistency to the offsetting market as well, and that's where there's a voluntary there's a task force sort of working on that. I just don't know how long it's going to take. If you were an environmental campaigner, would just say, look, it's taking far too long. And actually, that's what the IPCC says. They say it's, we've really only got till 2025 to have any hope now of keeping global warming below 1.5 degrees and so on. So I suppose I'm a realistic optimist. We're going in the right direction, but we're moving more slowly than we need to.
Yeah, I mean, I think that's always the problem with all these things. And there's always a dislodge between where we want to be and where we're going and how far it's going. So I'm going to ask you a question. In these green bonds, obviously we're going to reskill and upskill and all these things, and there might be even some unemployment coming along and everything. How will the impact be on inflation? I'm not sure
green bonds themselves have an impact on inflation. So I'm just scrolling through. Yeah. I see. Yeah. So I've got it. Yeah. Mohammed's question is, how do you see the growth of green bonds, green mortgage, green lending during high inflation globally? It's a great question. I suppose I would say though that it's not just green bonds and green mortgage and green loans that will have we'll see rates going up. We're going to see rates going up across sort of all instruments. So this is about the comparative return on green and sustainable instruments versus their sort of vanilla equivalents. As I mentioned, though, often, and I'd say this is emerging practice rather than kind of standard practice, but certainly in the UK and Europe, we're seeing green mortgages priced below a standard mortgage. As I mentioned, that's the theory there is that energy efficiency savings on a more energy efficiency property allow an individual to service a higher mortgage, or there'll be a lower default risk. And actually, if you think about, particularly or even before the conflict in Ukraine, high energy prices in any case mean that in the UK energy bills have more than doubled over the past year. So if one's able to invest in a more energy efficient residential property, commercial property, or so on, and that cuts your energy bills, then you should have more funds to service a loan. Default risk should be reduced. Therefore, the loan may be able to be priced slightly cheaper. I mentioned again, there's evidence of a greenium on green bonds and so on. So I don't think inflation by itself will particularly damage the green and sustainable finance sector. I do think, though, that the energy crisis and what we're now going to see, maybe in the short term, of course, we may need to increase slightly sort of fossil fuel sort of provision in the West, things like North Sea oil in the UK. I think probably we're now over a 10-year period, though, looking at much more significant investment in renewables and so on to bring down energy prices, and actually that will drive sort of green lending to the renewable sector and all the sectors involved with that, such as battery storage and clean transport and so on.
That's great. Well, thank you, Simon. I think we've kept you busy long enough. You probably have. I mean, you already said in the beginning that you've got stressful time. So let me thank you for actually doing your presentation and joining us today. I think it was very thoughtful and very insightful. And hopefully we've moved a lot of people to the business side of life that Val's now going to explain to them. So we can all do a bit of business and selling some training programs to everybody. But thank you very much. It was really, really good. And I really appreciate your time and effort in the presentation for us this morning. Thank you.
Oh, well, thanks for having me, Neil and Phoebe and colleagues. Just that, I'm not going anywhere just now. I'm going to stay and listen to what Val has to say as well. So I'll be here in the back. I'll be in the background, but I'll turn my camera off.
Thank you very much for that. It's awesome. Now, guys, we've got Val here, Val Buckham. She will talk about the certifications that CBI is offering. So without further ado, let me put Val on the spot. And Val, please go ahead and do the presentation for us. Thank you very much.
All right. Thank you very much for the introduction, Dr. Neil. I am also going to start off with an apology with any background noise because I have a raging storm going on outside with the wind howling and the rain lashing against the window here. So thank you. My name's Val Borkham. I've worked in financial services for 20 years and for the Chartered Banker Institute for 15 of those years. I'm going to give you an overview of the Chartered Banker Institute and also introduce you to the two courses that we offer, the Certificate in Green and Sustainable Finance and the Certificate in Climate Risk. So a bit about the Chartered Banker Institute. We were founded in 1875 and we're the oldest banking institute in the world. And we're the only institute conferred by Royal Charter able to award the professional designation Chartered Banker, which is the global gold standard professional designation. We were founded on the principles of working in socially purposeful, responsible and professional banking and working in the public interest. And these are the values that we still adhere to today. We offer a full range of courses from entry-level certificates to new entrants to financial services industry through to certification, training, education, thought leadership events for senior managers and long-term practitioners. And we're also, as you may have well deemed by now, advocates for green and sustainable finance and a move to a lower carbon emission future through the provision of world-class education. So as of today, this slide has also, we've moved on since creating this slide. We now have over 33,000 members across 100 countries, across 6 continents. We work with approximately 50 organizations globally, including universities, other professional bodies, banking associations, and collaborate together in the creation of thought leadership. As an institute, we also offer over 500 hours of continuing professional development materials. So it's all about qualifying, but also continuing to upskill in your knowledge and skills. This is a visual representation of where the Certificate in Green and Sustainable Finance is being studied. The certificate was introduced in 2018 and it's updated annually to take into consideration the fast-moving nature of this topic. So we have at the moment almost 900 students studying in 60 countries. And the climate risk certificate, which we introduced just at the end of last year, has over 300 students studying in 25 countries already. So there's Simon will be very pleased. We have quite significant global uptake happening pretty quickly, which is a great sign. So an overview of the Certificate in Green and Sustainable Finance. The course incorporates a book written by Simon, who you have just heard from, and it provides a comprehensive introduction to the topic of green and sustainable finance. So what is meant by green and what is meant by sustainable, and covering things such as the products that Simon's just mentioned, bonds, loans, mortgages, the involvement of the different sectors within financial services, so investors, insurers, bankers. The course is eligible or to the whole of the industry, relevant to the whole of the industry, and culminating in a view of the future considerations, the role of fintech, and the role of the financial services industry in moving towards a lower carbon world. Climate risk certificate, again, provides a comprehensive introduction to the subject. So starting what is meant by climate change and what is meant by the impacts, a consideration of current risks and challenges from measuring, monitoring, and reporting, and in defining taxonomies, regulations, and again, moving on to a consideration of the future and how to embed a culture of moving to a low carbon world across the organization. I thought it would be helpful to give you a side-by-side view of the courses. So both are designed for broad financial services, all individuals working in financial services from entry level again through to senior level, as it does provide an introduction and a comprehensive introduction. Neither requires any prior knowledge of the subject, although the climate risk course, individuals would benefit from some prior knowledge of risk management principles and also financial services practices. The climate risk course is aimed specifically towards individuals working within risk or aspiring to work within risk. And again, both courses help you understand how your role within financial services can relate to tackling this global climate emergency. A review of the learning journey. So both courses take approximately 130 hours to complete. You will be given 12 months to complete the courses. Many people complete them in a lot quicker time frame, 12 weeks or under. And as an example, for about 5 hours study per week, you would complete the course in 6 months. The course consists of a course book, a study book, but also a highly interactive study guide on our learning management system involving videos, quizzes, knowledge checks, links to further information. Once you are ready, you can go ahead and book the exam via our website. And the course can be accessed from almost anywhere, anytime. It's self-learning and also upon any device. So it's designed to be flexible and work around your busy schedules. A look at the assessment. So it's a 90-minute exam comprising of 75 multiple choice questions. You can sit the exam at home, being monitored through your PC camera, or you can choose to sit the exam at a local centre. You'll be presented with a list of options and available dates when you log on to book and choose that suits you most. The pass mark is 60%, and upon qualifying, you become eligible to use a professional designation. Like all professional designations, this is tied to ongoing membership of a professional body and therefore a commitment to a code of professional conduct and also a commitment to undertaking continuing professional learning to continue to upskill and increase your knowledge in these areas. And I thought I'd end just by showing you the learning experience when you log into our computer systems. You'll be presented with a link to your activities where you will access your materials and also be able to review upcoming events. When you click into your course, you'll be shown the units. We recommend that you study these in order as each chapter builds upon the previous chapter. But you can, of course, dip back in and out of these as you revise for your exams. At the end of each subject, there is a knowledge check questions that that act as a mock exam. We recommend working through these as you undertake your revision. And if you're able to answer the knowledge check questions, then you're much more likely to have success within your exam. Into each chapter, you'll see a link to the study guide and the relevant chapter of the book, and also a link to your interactive learning experience. And last of all, just a quick view of the materials and how you'll see them presented. And that's me. Thank you very much indeed.
Thank you, Belfast. Thanks for the presentation. I think this will be a motivation after Simon's talk for most people to enroll into these two certifications. These are certifications that EIBFs do offer in conjunction with CBI as well. So by all means, we can assist you in enrolling for these certifications. We have people here that can help you. Phoebe will post the contact details for the persons here locally that you can contact at EIBFS. We're in the process of building up expertise within the area of green and sustainability finance, because I think Simon highlighted the fact that COP28 is here in, I think it's 18 months. So obviously we would like to be there, and we would like to offer these qualifications in conjunction with CBI. Apart from that, there's not much left for me to say, apart from the fact that thank you very much for everybody attending. I see there is massive amount of questions. We will take these questions out and we will actually get them answered, and we will email them or post them to you, not post as in the olden days, but we will post them by email to you, because I think it's important that we do answer them. We will look at the questions that have been asked, and perhaps we will arrange later with somebody else or another webinar in this field of sustainability and green finance, because I think it's important. And then lastly, I want to thank Simon and I want to thank Valerie for their time and getting up early this morning in Scotland. I hope, yeah, the sun should be out by now. I hope the rain stopped well, so that's not too bad. And then, of course, the people I have to thank is all the guests that joined the webinar this morning. I think without you joining us and actually asking us these questions, these webinars won't be a success. So thank you very much for everybody that's joined this webinar. Thanks for your time and thanks for that, and have an excellent day, and we'll speak to you soon. By the way, I think the next webinar, Phoebe, when's the next webinar?
Yeah, we are in the phase of organizing it, probably 21. We like to have some confirmation.
Webinar, but we'll probably hopefully get the information out as soon as possible, and you can join that one. But thank you very much for everything. Thank you.
And I like to thank everyone, because we have plenty of questions. Unfortunately, we were unable to attempt it due to time constraints. And probably we, as Dr. Neat mentioned, we can incorporate another event based on these questions itself. So we have a quick feedback poll which we have. So if you can just share your feedback on what you feel about it, and that would be helpful. And also you have my email, so please reach out with your questions, as well as any other topic area which you would like to have events organized, so that we can have it as a continuous learning process. And this is part of our outreach with the financial service community and general public in the region, as well as in the wider MENA. So thanks again for taking and joining us. Simon, if you are there, we can have a quick...
I don't know if he's there. He's going to put his camera on.
I think right, Simon might have dropped. So I have taken, I will take a picture with whoever is available here. So if you can just focus on the camera, that will be helpful in a moment. And again, for all the participants, thank you very much for all the wonderful questions, and Ramadan Kareem to all of you, and see you soon in our next event.
Thank you very much, everybody. Appreciate your time. Thank you.
Thank you.